Asian markets sank Thursday on mounting trade war fears after the U.S. warned it was looking at more than doubling threatened tariffs on a range of Chinese imports. Shanghai and Hong Kong led losses after Donald Trump's trade representative Robert Lighthizer confirmed earlier reports that the White House was considering hiking levies to 25% from the announced 10% on $200 billion of Chinese goods. "We have been very clear about the specific changes China should undertake. Regrettably, instead of changing its harmful behavior, China has illegally retaliated against U.S. workers, farmers, ranchers and businesses," Lighthizer said. His statement comes after separate reports said the two sides were looking to restart talks to avert a trade war between the world's top two economies that could hammer global growth. In response to earlier reports that the U.S. was considering the move, Chinese Foreign Ministry spokesman Zhang Shuang warned Wednesday that blackmail and pressure from the U.S. side will never work on China. The latest developments come as Washington considers imposing tariffs on $16 billion of goods in the coming weeks, having already targeted imports worth $34 billion last month. Investors are left guessing about how the crisis will play out, with some worrying that, with both sides digging in, there could be more pain down the line, but others saying Trump is playing tough as a negotiating tactic. Markets are now wary of the next step in the trade war between the U.S. and China, Nick Twidale, Chief Operating Officer at Rakuten Securities Australia, said in a note. With the U.S. threatening to increase tariffs to 25% from 10% and the Chinese vowing not to react to blackmail to get them back to the negotiating table, this could be the catalyst that tips sentiment and some markets into a tailspin to the downside, especially as we enter the lower liquidity holiday trading season. Shanghai finished down 2% and Hong Kong lost more than 2% in the afternoon, while Seoul slipped 1.6%. Tokyo lost 1% and Sydney eased 0.6%. Taipei shed 1.5% while Singapore was also more than 1% off. In early trade, London shed 0.3%, Paris eased 0.4% and Frankfurt sank 0.9%. On currency markets, the pound was virtually unchanged against the dollar ahead of a Bank of England policy meeting at which it is expected to lift interest rates to their highest level for 9 years as it looks to fend off rising inflation. But the dollar weakened against the yen despite the Federal Reserve on Wednesday indicating it would hike borrowing costs next month, with the Japanese unit supported by the central bank's lighter touch to monetary policy. Oil prices rebounded slightly after falling sharply Wednesday in response to a jump in U.S. crude stockpiles and reports that output by OPEC and Russia increased in July. Key figures: Tokyo, Nikkei 225 down 1.0% at 22,512.53 close. Hong Kong, Hang Seng, down 2.3% at 27,701.89. Shanghai, Composite, down 2.0% at 2,768.02 close. London, FTSE 100, down 0.3% at 7,631.42 euro. Dollar, up at $1.1661 from $1.1659 at 2030 GMT. Pound, dollar, down at $1.3084 from $1.3124 per yen, down at 111 yen and 66 cents from 111.86 yen. Oil, West Texas Intermediate, up 18 cents at $67.84 per barrel. Oil, Brent crude, up 43 cents at $72.82 per barrel. New York, Dow Jones, down 0.3% at 25,333.82 close. Published in Daily Times, August 3, 2018.